Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics. Moody's downgraded Sri Lanka's sovereign rating to Caa2 from Caa1, outlining the following as reasons for its action: secure financing remaining elusive, persistently wide fiscal deficits compounded by keeping cross-borrowing needs high, lack of comprehensive financing to meet debt maturities given low foreign exchange reserves, and inability of the institutions to mitigate significant and urgent risks to the balance of payments. Moody's, however, noted that prospects for non-debt generating inflows have improved somewhat since it placed rating under review. In this ratings category, Sri Lanka joins Cuba, Ethiopia, Laos, Mozambique, and the Republic of Congo. The Sri Lankan government issued a statement expressing that, quote, this apparent hastiness and the view expressed during discussions that the nature of the budget is irrelevant to the financing plans demonstrates the lack of understanding of such analysts, also failed to take into account the latest developments in strengthening the country's external position. BOI Chairman Sanjay Mohotala has stated that Sri Lanka will receive around $1 billion foreign direct investments in 2021 despite the pandemic. FDI inflows for the first half of 2021 was at $398 million. FDI inflows have been on the decline since 2018, where inflows were at a record high of $1.8 billion since the Hambantota Port transaction. Noting that FDIs is not a panacea, the BOI chairman also highlighted the importance of capital formation. According to PwC, the Port City project has potential to contribute over $9 billion to Sri Lanka's GDP, given proposed plans are implemented under the Colombo Port City Economic Commission Act. PwC estimates the commercial sector to generate over 100,000 direct employment, whilst tourism, retail and leisure sectors are likely to create about 39,000 direct jobs. Cabinet co-spokesperson Dr. Ramesh Pathirana stated that the government decided not to increase fuel prices of state-run CPC considering the burden on cost of living. He noted that despite the price of an oil barrel increasing from $45 to $84 over a period of 2 years, the government will absorb the losses. Sri Lanka welcomed 16,500 tourists between 1st to 24th October. A trend, if continues, will lead to the highest monthly arrivals for the year. India, UK and Pakistan were among top source destinations. China Harbour Engineering Company is to build and operate a 4-lane elevated highway from New Kalani Bridge to Athuragiriya via Rajagiriya at an estimated cost of $821.6 million, which will be 100% foreign funded. The Cabinet co-spokesperson Dr. Ramesh Pathirana stated that the decision to curtail vehicle imports is likely to be reversed if sufficient foreign inflows are available and the country's reserve levels go up. He also stated of a scheme where LCs could be opened where foreign exchange can be sent from another source, not from Sri Lanka. The all-share price index at the Colombo Stock Exchange ended the week to 28th October at 10,137.85 points, up 2.6% from a week earlier. The index breached the 10,000 mark for the first time in its history. And in other market news, Lanka Credit and Business Finance's IPO was oversubscribed. The original offer was for 75 million shares and a further 50 million shares at the option of the board of directors, all at ₹4 per share. The CSE in principle approved Sarvodaya Development Finance's ₹1 billion IPO. SDF will issue 22.727 million shares with an option to issue a further 22.727 million shares on oversubscription, all at ₹22 per share. The IPO opens on 23rd of November. First Capital Treasuries announced its IPO offer of 7.695 million ordinary voting shares at ₹39 per share. This is scheduled for November 2021, subject to regulatory approval. And that's a wrap for today. Hope you have a great day. Stay safe and stay healthy. This video is co-produced by research consultancy firm Gradient Alliance and information design studio Atheno.